Hello folks, happy Sunday. We're going to look at the charts like we always do. Let's start with gold in the monthly time frame. This chart hasn't changed any from the last time we looked at it. This is still a continuation pattern. Gold is doing just fine. There's nothing going on in the gold markets to give anyone cause for concern, like the bull market's over or anything like that. This is just a pause before gold makes its next run higher. And expectation is that we're going to see 2,400, 2,500 by the end of the year. Back to the chart, MACD is in bull mode, currently on a sell signal, energy just below mid-level. So just fine in the monthly time frame. Here in the weekly, same thing. Gold bumping kind of sideways with an upwards trend. Got support along this first median line extension of this shift pitchfork. MACD in bull mode on a sell signal, energy is low. In the daily time frame for gold, bumping sideways, nothing exciting, below the 200. MACD in bear mode, kind of flat, energy is low. Again, just sideways consolidation. We're in the summer doldrums. June and July are the seasonal low months for the precious metals. So, nothing surprising in gold, nothing to be concerned about, in my opinion. Silver, it got whacked pretty good last week, but, again, just sideways consolidation, bumping along. We did lose support of this lower median line. This is a modified shift pitchfork. MACD is still in bull mode in this time frame, which of course suggests that the primary trend is up. Silver is going to follow gold, so silver's just fine. Weekly time frame, again, bumping sideways, just sideways consolidation. Silver gathering energy for its next move. MACD in bear mode on a sell signal, energy is low. This horizontal support resistance zone, obviously we're below that level now, below the 10-week moving average. So a lot of resistance overhead in silver, but silver will deal with that in time. Again, last week, silver got whacked pretty hard. That was Thursday. But a nice rebound on Friday, and we can see got some solid buying volume came in on Friday. This is a double bottom so far, and a nice bullish candle. Look at the lower wick or the lower tail on that candlestick. So that's bullish. MACD in bear mode, new sell signal, but mostly flat. Energy is low. Mining stocks, again, summer doldrums, not looking great, but not looking horrible either. Some of the individual stocks have been hit pretty hard in recent weeks. Here in the monthly time frame, price is still trending downwards in this sloping channel. MACD still somewhat in bull mode, dropping into bear mode on a sell signal. Energy is low. In the weekly time frame, we've got price sitting on a potential support level. This is the median line of a modified shift pitchfork, and we can see how it's acted. Here it's support, here it's resistance, support, resistance, support, and here we are again potentially sitting on support at that median line. Energy low, MACD on a sell signal in bear mode. Notice that MACD, we're almost at the point, the level of oversoldness where the mining stocks have found bottom and turned back up. So, maybe the stocks head a little bit lower from here, but should be finding a bottom some point here in the summer. Daily time frame, again, sitting on potential support. This is a shift pitchfork. Price sitting on the median line of that fork. MACD in bear mode on a sell signal. Energy is low. Again, nice positive volume on Friday. So we had buyers come out on Friday. This is Bitcoin in the weekly time frame. Crypto's still not doing good. It's bounced a little bit in the last week or so. Bitcoin bumping lower. This is a technical downtrend, high, low, lower, high, lower, low. That's the definition of a downtrend. So Bitcoin still in a downtrend in the weekly time frame. Look at accumulation distribution indicator. People are not, they're not currently accumulating Bitcoin. And I can't speak to the rest of the crypto markets. I've seen a couple of people trying to say that there are dark markets where crypto trades and it doesn't show up in the charts. I just don't know. Maybe that's true, maybe it isn't. I go by what I see in the charts that I can work with. Big selling last week that could be considered capitulation selling, which, you know, capitulation is one of the things that marks the bottom of a downtrend. Basically, in a capitulation, it's the holders, they just give up. They say, you know, they puke their shares or their coins into the market and say, get me out at any price. I don't care what it is. Let me take my losses. I'll go away and lick my wounds. And that change in sentiment, the holders giving up, that's a key indicator for when a market can find a bottom. So maybe crypto, or at least Bitcoin, is at that point. In the daily time frame, Bitcoin just bumping along. It's finding support. This is the median line of this modified shift fork. We can see it acted as support back in, that's May. And then for the last, what are we in? This is the daily chart. Yeah, so for the last 2 weeks, Bitcoin's been bumping along that support level. Notice that volume is dropping off. So, you know, okay, so maybe crypto's having a little bit of a rebound, but volume's not coming back in. MACD in bear mode, trying to turn higher, give us a new buy signal, give somebody a new buy signal, not me. Energy still very low. US dollar, this is the monthly time frame, double top with overthrow. So far this level is holding price back, or the dollar back. I don't expect that to continue. I believe that the dollar is going to work its way through that resistance level, and we will see higher levels yet in the dollar. MACD in bull mode on a buy signal, energy extremely elevated. I'm currently working through some of Bob Hoy's writings. He's got 5 indicators that he looks at to mark the end of historic bubbles in the financial markets. There have been at least 5 significant economic bubbles. They all have quite a few similarities that they all share. One of them is that the senior currency, which of course at this point in planet Earth's history is the US dollar. That is the senior currency on planet Earth right now. At the end of bubbles, it goes from strong to weak. And if I understand what Bob Hoy is saying, he's suggesting that this was the end of weakness in the US dollar, and that this turn higher is a strong indication that the bubble is popping, is in the process of popping. And again, this is just one of 5 indicators, and I'll share more when I have satisfied myself that I agree with his work. And of course, he knows a lot more than I do. He's been at it for a long time, decades. Well, of course, I've been at it for decades as well, but that's neither here nor there. Again, US dollar in the weekly time frame, potential double top. This is an Andrews pitchfork. We've got price bouncing loosely between the upper median line and the first median line extension of that fork. Some overthrow to the top. Again, I don't agree with analysts suggesting that the dollar has topped and is rolling over. And in my mind, this is just a consolidation. Basically, the dollar is gathering energy before it makes another move higher. MACD is in bull mode on buy signal, and energy is very elevated. Daily time frame, more of the same, sideways consolidation, bumping along in this support resistance zone. That's the double top. That's what that's marking, is the double top. MACD in a bull mode, right on the edge of giving us a sell signal, energy dropping, but still quite elevated. Again, I'm expecting to see higher levels in the dollar. This is the yield on the 1-year Treasury in the monthly time frame. As I've said before, I like this chart. These big vertical moves let me know that something funky's going on in London, financial world. When this vehicle moves vertically, good things are not happening in our economy. And so, we know some of what's going on here. We've got inflation raging at 40-year highs. Stock markets are correcting, crypto's correcting, there's just a lot of stuff going on financially. We've got a conflict over in Europe. What's interesting to me in the debt markets is that they were zooming higher, screaming higher, trying to go parabolic. And then in the last week or so, they backed way off. Well, notice that when they backed off was right after both the ECB and the US Fed declared that they're going to take unprecedented measures to deal with inflation. And of course, how do you get big moves like this in the debt markets, folks? Well, that's right. The central banks are out there buying bonds. So as much as they want to talk about quantitative tightening and the Fed's going to clear out its books and sell its debts and all that kind of stuff, it's all BS. That's not what's happening. They're printing more money. They're buying debts all the way across the duration. I'm going to spin through the debt markets, the Treasury markets, and that's exactly what we're going to see. This is the 1-year bill, daily time frame, big pullback. We just don't get moves like this in the debt markets without central bank buying. Same thing in the 2-year, big pullback, 5-year, big pullback, 10-year, big pullback, 30-year, big pullback. So anyway, that was it for the debt markets, and that's really my point on the treasuries. The recent action is the central bank buying up debt the way they always do, telling us that they're going to quantitative tightening, when in reality they're out there printing more money and buying more debt. Equity markets. So this is S&P 500 in the daily time frame. Big move last week. This is Wednesday finding support, Thursday heading higher with a bullish candlestick, and then a pretty good sized gap on the open Friday morning, and then a big bullish bar. Notice that this price bar closed very near its top. That's a bullish indication. We've got MACD on the verge of giving us a new buy signal. Notice that it's still in bear mode. Stochastics, or the energy level, rising sharply. Like crypto, the equity markets are still in technical downtrends. High, low, lower high, lower low. If the S&P 500 in this case, if it can push through the 20, it's going to run into resistance up here at the 50-day moving average and this support resistance zone. If it rolls over at that point, we'll have another lower low, which again is just a continuation of the downtrend. So I don't expect to see S&P 500 push past this prior high or the 50-day moving average. Maybe it pokes through the 50, taps or tests this support resistance zone before it rolls over, perhaps. In the Dow, same story, technical downtrend, pushing up into the 20-day moving average. We got a support resistance level just above that. Upper median line of this modified shift pitchfork, which has acted as support, resistance, support. Expect that it will act as resistance at least for a little bit. Maybe we get a test of the 50 before another rollover happens in the Dow. NASDAQ pushing up again last week, actually penetrated the 20 and then ran into resistance. This is the first median line extension of a shift pitchfork, which has acted as resistance before. Notice that price was unable to overcome that resistance. Perhaps we get a push up to the 50, maybe not. Got a new buy signal from MACD on Friday. Notice that it's still in bear mode, energy rising sharply. Oil still heading higher, and this is crude oil. My opinion, we're targeting $140 a barrel this monthly time frame. MACD obviously in bull mode on a buy signal, energy very elevated. Brent similarly, I believe, is headed higher, dealing with resistance at the 125 level, MACD in bull mode, energy elevated. That's all I've got today, folks. We did have a little bit of news this morning. Biden and the G7 are going to sanction the import of Russian gold, which of course is really just a fart in the wind, because back in March, both the LBMA, the London gold market, and the COMEX stopped accepting or dealing in Russian gold bars. And so, you know, Biden and the G7 can ban Russian gold all they want. It's already occurred months ago. So again, just another political move. I'm going to close my mouth there before I say anything that'll get me banned from YouTube. Have a fantastic week, folks. I look forward to talking to you soon.